Hi everybody and welcome to this week's US dollar index update. You're speaking with Nick McDonald from Trade with Precision. Very shortly we'll go and have a look at the DX contract itself and have a look at where that might be heading this week. But first and foremost I want to look at some of these spot currencies just to make a few points as to what they are doing and how the US dollar is looking out there against some of its major counterparts. You might be wondering why I'm starting here with AUD USD. When the Aussie dollar doesn't actually hold any real weighting at all in the US dollar index. And the reason is that the Aussie dollar right now is the strongest currency out there versus the weakest currency being the US dollar. So when we look at this pair, it's one of the strongest pairs, it's had one of the strongest trends, it's had some of the biggest moves. Therefore, a lot of people are watching this and thinking, when will the weakest currency, i.e. the US dollar, strengthen, and when will the strongest currency, i.e. the AUD, have a little bit of a profit take, a little bit of a sell-off? And of course this has to happen. We never know when. We know trends can continue for quite some time. We know that we'll also just have little breathers, little pullbacks before continuing on. But as it stands right now, this is the strongest one, this is the strongest pair, so a lot of people are watching this for a potential pullback. Let's therefore start at higher time frames and we'll do our top-down approach from the monthly. So you can see this big move up we've had just in the last few months. We've had a really good run up here on the Aussie dollar, and we've actually come up to a level which a lot of people of course have been watching, which is parity. 1.000 on AUD USD being the big level where it would mean the Australian dollar is worth more than the US dollar when it trades above that level. So this is a key measure. Now there's not much else to say on the monthly chart other than the fact the trend looks strong. We are making higher highs and higher lows. We are converging as we do to the upside. See how as price has broken these highs, so has the MACD and so has the RSI. I like that. It's a good sign of strength, a good sign of continuation. However, it's also one sign to the negative is that we are showing signs that we need a bit of a pullback. Whenever price moves too far from its moving averages, it needs a pullback. Not necessarily right now. This is a monthly chart. This could continue for months before pulling back. Look what happened back in 2008. We had a long move down away from the averages before finally the moving averages coming down and price consolidating to meet it. So it's just one small negative point to say this could move down, but amongst a bunch of others that are saying this continues to look strong on the monthly chart. Let's come and look at the weekly though, and we can see things in a bit more detail. Now, we've tested that 1,000 level, as I said, but also we have come up and we've tested the 2008 highs here. So this is the 2008 highs on the Aussie dollar, and we came up and we actually looked like we were going to break through it. But actually, if you really look closely at what's happened, we've broken through it slightly. But the week before last, we broke up, we rejected it. Then this week, we broke up, we tested 1,000, and we formed this quite indecisive candle. Now, many people call that a doji candle. You can call it whatever you want. It's gone from being quite certain in terms of these candles were all quite strong up candles to an indecisive candle where there was no clear winner between buyers or sellers. So the reason that these candles actually mean something is we've gone from certainty, i.e. certainty, these candles were won by the buyers, the bulls were winning, to a bit of uncertainty, as in nobody really won this candle. It was a bit of a mix between the buyers and the sellers. That's a potential sign of change of direction. Also happening as we're breaking and somewhat rejecting the 2008 highs, and as we're testing and also rejecting off that parity figure, which a lot of people were watching for the Aussie dollar to get to. It finally got there, it broke by a couple of pips, and there was a lot of profit taken obviously at that level. We've fallen 100 pips straight off that level. Coming down to the daily chart doesn't tell us much more, but just remember this pattern now, that this weekly chart in particular, a long way from its moving averages, as it is on the monthly, after an extended move, doji at a form of resistance being the 2008 high and the big number, showing some signs of a pullback. Let's have a look at a couple that hold some more weighting. Let's have a look at cable first of all. Okay, so on cable, starting from a monthly chart looking bullish. It was in a decline and a downtrend. We've now shown signs here, we've put in a higher low. We're not really trending therefore, but it's showing signs of pushing back up and at least trying to make a higher high up around 1.7. So monthly charts looking like continuing. Weekly chart, not looking so great. See how we've come up and we're really testing now into resistance. So look at how strong through here, how much support and resistance there's been in this zone, in this area. Remember, it's not always a precise point, sometimes it is. But this is, in fact, in many places, quite precise, where price has tested and failed, or tested from the other side and rejected. A few other times it's gone through it a little bit, but there's been many precise touches on this exact level. Price has now broken through it slightly, and rejecting. And notice that even though on the weekly chart we're not a long way from its averages like we were on the Aussie, we do have this doji type candle, this indecisive type candle at a form of resistance. So let's just remember that pattern. The daily chart here actually shows some different, some more indication of direction. And that is that we've actually broken up through that resistance level, which we just identified on the weekly chart. But when we zoom in down here on the daily, you can see that price has broken out and it's rejected once when it tried to break out earlier last week, another time when it's broken out and rejected, and this time on Friday when it really broke out and rejected strongly. At the same time, see how when it's breaking out, I like to compare what price is doing versus indicators. See how price is broken above this high from back here in early August, broken up to new highs. See how though the MACD and RSI are still making lower highs when we compare high with high. MACD and RSI are failing to break to new highs. It's showing weakness. That's called divergence. Not only that, but we've resulted in this very bearish candle to end the week. So what I'm watching here on cable is for a bit of a pullback here. Therefore, a pullback on GBP means a rally in the dollar, and that's showing some indication of it. Not looking for a major move here, but looking certainly for a move back down to around about this kind of 158 level. Now looking at euro dollar before we go and look at the DX and tie this all together. Okay, so the main point here is just to keep on looking at the same pattern we're seeing, and that is starting with the weekly chart. We are a long way from its 10 and 20 period moving averages. We identified this on last week's video of this 1.4 resistance level. Again, this one's probably nowhere near as strong, in fact, as the level of 1.6 on cable. However, it has been an area of support and resistance in the past where there's been multiple and precise touches on that exact level. We identified it last week as a sensible place for a pullback. We've now rejected that level, and we've got that same, on a weekly chart, that same doji candle. We've gone from decisive buying for 4 weeks in a row to indecision. That's the potential turning point where we change from buying to selling. I'm not trying to pick highs, but these markets need to pull back, and it's looking like a sensible place for that to happen. Let's go and tie this together on the dollar index. Let's start with the monthly chart on the DX. This is still in a period of indecision as far as the trend goes. There's no clear winner between buyers and sellers. For those of you who don't follow the charts closely, all you'll be thinking about as well, the dollar is in a very strong decline, and it is across, against some of the currencies. But here, if we look at the dollar index and put things into perspective by looking at a higher time frame chart, what we see is actually we're in a period of indecision where price is still making higher lows and still making lower highs. What we do see though is clearly just how strong support is down here around about 75, and also there's not much to stop the price getting down there at the moment. Not much to stop the price testing it. However, if it does test that, the fact that that level is so strong, there's such strong support there, also see how the indicators are pushing up and making higher highs. These are positive signs that if it does test 75, it should get a bounce off 75. So I'll be certainly watching 75 for a bounce if we get down around that level, or for some kind of rejection of the 75 level. Coming to a weekly chart, and this is really where the other analysis across, you'll see why I looked at the Aussie dollar, cable, and euro dollar, because they show the same pattern of we're at some kind of support or resistance, in this case being support, and we've got that doji pattern on the candles for the weekly chart and a long way from its moving averages. So let's have a look at 78. 78 identified last week has been a really strong key level. When we zoom down to lower time frames in a minute, we'll look at just how price rejected that already this week. But starting from the top down, you can see that we've got really strong support. They're very precise on that exact level, and now we've got this doji candle. So really looking at where we should be going next. Well, as far as this time frame tells us, like I said on the monthly, if it comes down towards the 75 level, we would look for a bounce or some kind of rejection. And at the moment, there's nothing to stop price really getting there. However, this is showing an early indication of a potential change. And if price breaks back up through last week's high, so we look at the high of last week's candle, it was 78.17, literally one tick above there. If we can get to 78.18, let's say, just to have broken up through, confirmed the change of direction, we'd be looking for a pullback. Not trying to pick a bottom, but certainly looking for a pullback back to around about 80 or 81 on the DX, and that's starting to show those signs. So it really does depend this week. The first few days will set the scene. It depends if we just continue down. In fact, even just a small red candle is going to be showing more sign of a move back towards 75. But any kind of up candle early in the week, and then a potential break, or maybe even an early break up through 78, is going to be looking very bullish for a move up on the dollar index this week, and confirmed across a lot of its major trading partners. Coming down to the daily chart, this is also just, it's only one candle, but it's a very bullish candle here. Very bullish rejection candle, having broken down through 77, broken right back up through, and looking strong. Let's just come down to a lower time frame and just have a look at what happened when price did test 78 earlier in the week. I identified this on last week's video that as long as we were below 78, it did remain bearish, and it had been such a precise, strong level. We broke up through, and this is what I mean by a rejection candle. This is what I'm looking for when price rejects levels. It's a very strong rejection candle. We broke up, we rejected it immediately, and then we continued on down. That's the kind of thing I'm looking for when price tests major support or resistance. So same thing I'd be looking for if we do continue down here on the monthly chart and test 75. I'll be looking at dailies and weeklies for that very strong sign of rejecting off that level for a chance to get long off that level. But as it stands right now, literally I'm watching this weekly chart. That's the most important chart this week to see, do we continue down, do we continue up? We still remain bearish as long as we're below there, but the candles in the early part of this week, the daily candles as to whether we can be up or down, are really going to set the scene. And my preferred trades are that bounce off 75 or a break back up through 78. In either case, both looking for trades to the long side to really set up and get that little bit of profit taking coming in on the US dollar, as well as across some of its major trading partners that have also been very strong. I hope that helps. Have a great week's trading, everybody, and I'll speak to you on next week's update.